Welcome to update number 28 for the Robinhood stock portfolio. As you can see, the week was another red one at negative 3.29%. We're still in after hours today, but down 2.50%. For the 1 month chart, we're down negative 4.39%. 3 month chart up 3.75%. 1 year chart plus 9.91%. And the all-time chart plus 3.16%. So things have been selling off for the past couple of weeks, at least for the companies that I have. It's completely fine. I'm getting good pricing, which we'll talk about in a second. But yeah, it's not a big deal. I don't know how long this is going to continue, but that is the power of this strategy that I have. It's a long-term strategy. When things sell off, I actually get more excited because I get better pricing, which then when things start to come back up, which they typically do with US stocks, I'm going to make even more money. So I actually like these downturns. I mean, naturally, when you see the money heading in the wrong direction, you kind of get a little anxious about it. But with the strategy that I've been doing, it's been working. We're still green overall. I mean, if things come back down to the crash point, we're still going to keep doing what we're doing. I mean, that's just the strategy here. I believe in it. But yeah, I mean, obviously, you guys should do your own research before you make any of your own decisions. But you know, there's no way to know how long the downtrend's going to keep going. But in my opinion, I think it's probably going to plateau here in a week or two just by going off of the pattern kind of happening in general. But that's just my opinion. Let's move on to purchases for the week. So speaking of good pricing, LTC was basically on sale. My average cost was around 36 something. I bought in with $100 this week. Average cost is now $36.30. We've got about $200 in here. I haven't bought into LTC pretty much since the beginning of this portfolio. So that's what I'm going to be looking at for the next couple of weeks is companies like that, kind of trying to rebalance the portfolio a little bit. But yeah, we'll talk about that a little bit more into Simply Safe. We're going to talk about dividends first. So looking at dividends, the last one we got when we talked last week was AG&C. So since then, we got 3M, Realty Income, Stag Industrial, Pembina Pipe Corporation, Main Street Capital, and Prospect Capital. So $15.07 already for September. We know we got SPHD coming in every single month with $5, so that's about 20 bucks there. And then LTC should pay probably another 57 cents. So yeah, we're going to be around $20, I think, for September. It's going to probably be less than August, but we expected that. August has a lot of quarterly dividend companies. So yeah, we're still heading the right direction. It doesn't mean we're doing anything wrong or the dividends are shrinking. It's just now we have to factor in quarterly dividend payers. So that's why September should be a little bit smaller than August. Moving on to Simply Safe Dividends, my dividend tracker. So last week's numbers were $311 for annual income. Dividend growth was 0.3% and dividend yield is 4.45%. With the addition of LTC, annual income has increased to $317. Dividend growth has not changed and dividend yield is 4.54%. So nothing major changes there. It says down 1.6% for the balance and performance. But anyways, going back to what I'm doing with purchases now. So we bought into LTC. It's about here now 2.9% of the portfolio, which really isn't that much. Next week, we're going to be really looking at Stag. If the pricing's right, I'm probably going to buy into them. They're less than 1% of the account, and I believe they pay every single month. So we're going to be looking at that. Safety score is it's borderline, but dividend yield is very high at 4.55%. And they do have dividend growth of 1%. So, I mean, it's not a bad purchase there. Obviously, that's my opinion, but we're going to be looking at them, possibly Coca-Cola, since again, 1.4%, still growing, so on and so forth. So that's kind of the plan for the next couple of weeks is to rebalance. If we go the other way, like Apple's 25% of the portfolio, that's probably a little too much for one company. So yeah, that's kind of why we're trying to rebalance a little bit. The Apple hype is kind of gone anyways, so maybe if it keeps going, we'll buy into it some more. But right now, I think 25% is just probably a little bit too much of the portfolio. So that's pretty much what we're doing right now with the portfolio is just kind of rebalancing into companies we already have. I mean, if a company is 1% or less of your portfolio, I don't know if it's really even worth having. But I I do like a lot of the companies in here, and especially monthly dividend payers like Stag and PVA. Those are good companies, and again, they pay monthly, so it's cool to see dividends getting paid more often. A lot of dividend investors say it doesn't matter, but in my opinion, it does matter. I like to get paid more often, not less often. My day job pays me weekly. A lot of people get paid bi-weekly. When I switched to weekly pay, I mean, it was kind of life-changing in a way. I feel like I have more power with my money. I get it sooner. So, I mean, it's just an opinion, but for me, emotionally, when I'm like looking at my stocks and my dividends, the more often I get paid, the more it's easier to kind of reflect on what I'm doing and see if I need to adjust. I feel like I can react faster. So again, that's my opinion. I'm going to stop rambling here, but that's the plan for the portfolios. Just keep rebalancing into the companies we have. Once we get some more margin paid off, we'll be looking at more companies to maybe buy into the portfolio. But right now, I think we just need to rebalance for a while and keep pushing that dividend growth. So thanks for watching. If you made it this far in the video, please leave a like on the video. We've had a lot of new subs. If you guys are watching my videos and you find value in them, just please sub. It's completely free. But yeah, we'll leave it at that. I'll see you guys tomorrow on the M1 Finance Update.